Now let's talk about real estate private equity. Obviously, when you talk about scale, right away, the equity is what limits people from scaling.
Or ever starting.
Exactly. So this kind of the GPLP structure, the kind of idea of an operator, a sponsor, a manager that looks after the deal, and then the investors who come on board as silent partners, as the limited partner. Talk to us about when you realized the need that existed for equity, and then how did you go about creating and cultivating those relationships that needs to be in place for you to be able to raise equity and getting into that space. And we actually met at Passive Investing's capital raising summit
not too long ago,
in person. So we know that you're a student of the game. Talk to us about the start and what you realized, and also the mindset needed to be able to succeed in the capital raising, because capital raisers are a lot different than operators. Operators are very much deal focused. That kind of, they're not really relationship focused, and like people like Eva, who is a people person and what have you. Talk to us about your start, about that topic, please.
Sure. So coming, with my background again in fix and flip, like, to me, all real estate boils down to two things: deal flow and money, right? Like, you can be successful in any real estate niche if you can just generate leads for deals and you can generate leads for capital, right? You are going to be fat and happy if you can do one of those. If you can do both of those, like, we're talking stratosphere type heights, right? So, I knew that both were needed. Just from the fix and flip experience. I incorrectly assumed that I was going to be able to take some of those private investors from the fix and flip space and transition them over to becoming private investors of mine in a syndication, right? To me, it's like, it's less work for them. They don't have to worry about moving their money around quite as much, right? The returns are a little bit better. The deal is more stable. It's a more, to me, it's a more sure thing investment. There's way less risk. There's way less crap that can go wrong with a 150 unit apartment complex versus a single family fix and flip, right? And that's totally counterintuitive. But that wound up not being the case. So we focused initially on figuring out how to find deals, how to create deal flow. And we were like, okay, we don't have any ability right now to generate leads and define deals, but I have these relationships over here that I think I can bring over, right? So we were find deal. We got the money in we'll be able to figure that out, right? And so we got our first deal. We had a sponsor that we had met, key principal, loan guarantor, right? Whatever term you want to use. And so they were on board and we started approaching those people. I probably should have approached those people before we actually had a deal. In hindsight, that would have been really smart. Instead, I waited until we had a deal and none of them wanted to come in. So I was just totally wrong in my assumption.
The fallacy that find a deal and money shall come
is not
that's
the case.
Exactly what it is.
It's not the case. And it also, somebody that invests over here, even though it's real estate, if it's a different real estate investment, it's not a slam dunk. It's not a sure thing.
Yeah, so me being a Vancouver real estate guy, when I started looking at US deals and I went to investors who had I had made them a lot of money over the years, millions of dollars. Right away, it wasn't as easy as I thought, because you talk about US, possibly having to deal with IRS for tax filings, even though the returns were better than the Canadian deals that I had done for the past decade.
And still 100% passive.
It wasn't the conversion that I expected, but keep going.
I think we all had to go through that realization when we first started.
Yeah. And like typical entrepreneur, I got it covered, no big deal. Work them over. And then it was like, oh shit, none of them want in. So we've managed now over time, right? It took us 2 years to find our first deal. And so now over the past 2 years, we want to convert a couple of those people from that were lending us cash on the fix and flips over to the syndication, but nowhere near as many as we initially thought. So we wound up having to bring in a co-GP on that deal to help out with equity. And then we also gave them some additional responsibilities just to make sure we were cool in the eyes of the SEC. But, you know, it was really kind of out of necessity that we figured out that we needed to do that. And so we have really, over the past 2 years, we've become more aware of the fact that the way that we were trying to raise capital initially was just going to take us forever to get to the point where we were able to really raise the bulk of the equity for our own deals. And that's the goal, right? So for anybody that is active in the space, you know that we're cutting up the general partnership. And so the more of that GP that you can keep, obviously the better for yourself and for your team, right? There's less cooks in the kitchen. It winds up being better for the LP too, in my opinion. So we have really, we've brought equity, we've raised equity on every deal that we've done so far, some more than others. In some instances, we haven't needed to bring much, so we haven't really even tried that much with some of our investors. But over the past year, we've really spent a lot of time and effort to reimagine the way that we were trying to raise capital. You know, none of my partners or I had a fantastic network of people when we got started. So we've really almost been kind of like building it from scratch, right? And so what we were initially doing was we were doing a lot of real estate events. We were going to different real estate networking things, multifamily, local RIA meetings, and we were shaking hands, meeting people, taking business cards, following up with a lot of those people. And while we were able to find some investors doing that, you know, when you're one of 100 real estate people in a room of 100 people, it's not that easy to raise capital, right? Because everybody's there for the same reasons. And quite frankly, a lot of people at those meetings are really looking to do the same thing, right? You're not running into a lot of people that want to invest passively as an LP in your deal when they just met you.
Yes.
Right.
Right.
Yeah.
So we realized that while it was somewhat successful, that the rate at which we were building our investor base, you know, it was going to be a long time before we could realistically expect that we'd be able to raise the bulk of our equity in-house. And so that kind of was a catalyst for us to reimagine. And now, you know, we've rebranded our business. Investor Boardroom is our new brand. I'm doing a ton of content. You guys are ahead of me. I've got a podcast coming Q1. But, you know, everything from consistent social media content to creating a Facebook group that's focused on multifamily that we now have 23,000 members. So it's really, we learned that if you want to be a money magnet, which in my mind is the goal, right? That you have to have a lot of lines in the water from a marketing perspective and from a branding perspective, right? Everything that you're doing is really pointing back to the brand. And with social media and all these different sites and different meetups and all these different things, like there's a lot that goes into getting all those systems built out and to being able to be active in all the areas that you want to be active on. And so, you know, we really kind of took the approach of, you know, let's do one at a time. So it was, okay, let's figure out, you know, let's get an ebook put together. We're going to draft an ebook. We're going to get that out. Now we're going to focus on more social media content. Now we are focusing on a lot of email drips, like we're beefing up our email drip campaigns. So it's just been a lot of education and a lot of laying the groundwork over the past year.
Sorry, go ahead.
No, I was going to say,
please.
yeah, putting these fishing rods out, it does start to pay off. And when it starts to pay off, it's a snowball effect. So it's a lot of work at the beginning. And a lot of people are scared to like take that step to start everything. But it all I like how you kind of focused on one thing and then went to the next and the next. And then it does start to become this snowball effect. And before you know it, boom, you're a capital raising machine. And there you go.
And it's also the fact that the free content, the educational side. I mean, when I got involved in the space, US multifamily became my focus a few years ago. I noticed that groups out there, private equity firms, they were giving out so much content and free information. They were literally giving out the blueprint of what they were doing. And to me, being in the space I was here in Vancouver, real estate people were very much guarded. It was hard to get a plumber referred to me from some of my peers who were in the business for 30 years,
Vastly different
let
from the
alone sitting down
US,
and giving the blueprint of the business. So that was what attracted me to the business. And then I ended up actually investing with some of those operators that were giving out that content. So that creating that content and giving out for free to investors is huge. And also, like in our case, it's pretty easy for us when it comes to comparing our product to other products available here in Canada because we have a monopoly. I mean, the US yields are tremendous compared to the Canadian products. So sometimes it sounds too good to be true. But what we notice with our US investors, we critique our deals just very, very transparently with our U.S. investor partners. We say, hey, this is what we do. This is what we are. We are allocators in some of the deals we get involved with. So we are somewhat capital raisers with some asset management duties that we also have. But we also have to educate them that, hey, there is not an extra slice of the pie that's given to us. The GP just shares within the profits. So education is huge, creating content. So we applaud you on that side of it. I love to be on your podcast. If you do have guests on that podcast at some point, I've seen some of your videos though on LinkedIn. I think you're very active on Instagram as well. Some of your videos are pretty cool that I've watched. For sure.
You're just saying that because I'm a guest.
No, not at all.
And that's a great way to nurture the relationships too. When your investors constantly are seeing you put out content, they just have that more and more trust with you because you're being a thought leader in the space. So the more and more they kind of rely on you and can trust.
Taking a quick step back for my next question, Adam.
So I would like to say, 𝗖𝗼𝗜, I'm working with a guy right now that's helping me build out all these email funnels, right? Yeah. And what he said to me, and so for any of your audience that is looking to get to being that money magnet, right? Omnipresence. That's the phrase that stuck with me is you want to be omnipresent. So you're in their email, you're on their Facebook feed, you're on their Instagram feed, they've subscribed to your YouTube channel. So every time you put out a new video, August, that's probably where you see a lot of my stuff too, is YouTube, where we started a YouTube channel a couple months ago and we're putting out bi-weekly videos on there. Those are like my longer videos, right? Like social, you kind of have to gauge. Like Facebook, actually I get very little engagement with videos on Facebook. And then the Instagram videos, the way that the algorithms work, if it's not a reel, 60 seconds or less, the algorithm doesn't push it the same way. So the bulk of the stuff I'm doing on social is a lot more short videos, which is difficult for me because I tend to be wordy, obviously. So chopping that message down, I could take 3 minutes to say something that would take 𝗖𝗼𝗜, you probably 30 seconds, right? Just the way that it is. But it's that idea of being omnipresent where people see you, like, they're like, oh my gosh, this person is everywhere. Yeah. And that is one of the big things that you're really aiming for, I think, as you are looking to build that brand and build that recognition and become that money magnet.
For sure. And especially with the technology that exists today, that retargeting, especially with YouTube, you can actually do a YouTube ad and target people who've looked at, viewed your previous YouTube videos. Yeah. And then YouTube doesn't charge you unless the person, clicks on the link. So it's a great way of promoting. And then they're seeing a deal was closed and they have fear of missing out on the next deal. And they're like, oh my gosh, what is he talking about? Passive income, passive cash flow, what? All this stuff gets people really excited. Exactly.